What's going on, guys? So I want to talk about how to use basic support and resistance. This current stock is SCHW, which is Charles Schwab, and I'm looking at a 6-month chart. So basically, if you can see, these are all the candles, and you can kind of see it's kind of making a wave pattern. But how you do this, and I'm on eTrade Pro, I use a select a tool, select a line, and I use this because it pretty much levels it out for you. You don't have to manually draw a straight line. You can see here that using the candles, they continually hit near the same price over time and then fall back. Right here we're looking at around the, we'll say, 44.30 price. That's where we have our resistance. This is resistance because the stock has continually gone down and up and hit this price, came down and hit this price again. Our support would be around here, and support works the opposite of resistance. It's when a stock falls and doesn't go below a certain price. Here we're looking around the 35.87 price for our support. You may be wondering, well, why? What about this? This fell below support. It won't always be perfect, but sometimes it's perfect, sometimes it's a little bit outside of it. But the reason I drew the line here is because you're looking for a repetitive stop. See, it hit the price, came up, came back down, and hit the same price again. So I'm going off this for my support instead of this because it's a little bit outside of the support, but we don't have any additional pullbacks to this price down here at the 34, 60, 70 range. So how we're trading this is we're looking for swing trades with stuff like this. You're looking for it to repetitively hit the same price. Here we got a pullback right here to the 35.87. The stock runs up and pulls back to the 35.87 on a big green candle and an increase, almost a breakthrough average volume, indicating a possible entry point right here. And how would we know to get out of this trade, and how would we get the biggest move out of this trade without getting out too early? Is our resistance is going to be our target price, or as close to it as we can get. So we want to ride this all the way up. The closer we get to resistance, the more cautious we need to be. And this right here, this candle right here, is indicating a reversal, saying the stock is going to pull back. And here we have a decrease in volume, decrease in volume, decrease in volume, indicating, confirming the drop in price. And we'd want to get out around this area. Now, if the stock breaks above the resistance line, which is this line right here, right at the top of all these candles, if it breaks above that, old resistance becomes new support. So once you break above this line, now this becomes the support line. So you're looking for the stock to continually pull back to this line, and if it were to break below it, that would be a good indicator to buy puts on it or get out of the trade. I'm going to briefly touch on support and resistance with gaps that you really have to watch out for, that I feel like a lot of people miss and don't pay attention to. And I'm going to go over this in detail more in a different video, but I will touch on it just a little bit since it kind of has to deal with basic support and resistance. Often you get these gaps, especially like on earnings. So here's a gap up and here's a gap down. This gap down right here is on earnings. These also create support and resistance. This gap down right here, when it drops down like this, right here, like this big gap, this becomes resistance for when the stock is coming back up. So now right here is your resistance. You draw this line right here, and say this hasn't happened yet over here, and you're down here. This is your resistance, this gap. you're looking for the stock to bridge this gap. If you're up here around this price, you wouldn't want to be buying calls on it. Here, it worked out, but really you need to wait until it bridges this gap first, because this is major resistance right here, this gap. You need to wait until the stock fills this gap right around this price right here. And you can see when the stock came up to this gap right here at this resistance line, right at the top of this gap, it starts getting really hesitant. But you can tell you start consolidating right here and making a little bit of a channel. You can see the stock just kind of stays. Oh, trying to get rid of this. Here we go. After it hits this resistance right here at the bottom of this gap, it starts using this bottom of the gap as support and kind of staying in this channel and consolidating. What we're looking for is a breakout above that resistance line at the bottom of this gap where it previously dropped down at earnings. So right here, when it busted above that resistance line right here at the bottom of this old gap, and we have an increase in volume right here, this would have been a great swing trade on calls right here. That's just the super basics of gaps, and they work the opposite when they are gap up. When they gap up like this, the bottom of the gap becomes support. So once this stock gaps up right here, this gap becomes support, and you can draw a line right here. You can tell that even if none of this stuff over here to the right had occurred yet, and you drew this line here, you would know that's your support. You can see where the stock came down and hit that support line twice, 3 times right here, confirming the support here. So you're looking for pullbacks to this support line and an increase in volume like this, not necessarily around earnings, but an increase in volume right here off this support line to get in on your trade. That's all I'm going to cover for right now. I just wanted to make a short video. This is my first screen recording, and this is more of just a test video. If you would please comment below things that you would like me to go over with, maybe different indicators, what indicators I use, how I trade around earnings, anything that you have questions with. If I don't know the answer to, I will find out for you and I will make a video.